In the months following every Bitcoin halving in 2012, 2016, and 2020, we have been blessed with a face-melting Bitcoin rally, and many people are saying, hey, look, there's another Bitcoin halving coming in under 160 days. The exact same thing is going to happen. But what if this time is a little bit different? What if Bitcoin is actually going to see a double halving in 2024? Well, today we're going to be explaining all of this. We're going to be looking at what the Bitcoin double halving is by running some very interesting maths equations. We're going to also explain what impact Michael Saylor, as well as the flood of institutional capital coming into the space, is going to have on Bitcoin's technological adoption curve. And last but not least, we're also going to challenge some very common assumptions in the Bitcoin space and make the case for why many of these perfect and predictable 4-year Bitcoin halving cycle models and predictions could in fact be flawed, and why they could be broken to the upside in an upcoming Bitcoin bull market. Or as Michael Saylor would say,
what happens to all these wonderful models if 10 billionaires decide to buy $1 billion of Bitcoin each and announce we bought it, we're not ashamed of it, we're going to buy more? All your models are destroyed, completely devastated. Bitcoin goes to the moon.
So what are all of these models and 4-year halving predictions and prophecies that people are bombarded with on a daily basis that people like Michael Saylor are saying could potentially break into the future? Of course, we're talking about infamous models like the Plan B stock to flow model that even recently appeared in a Forbes magazine article. We have these models like the rainbow charts, which have been around for many, many years in the Bitcoin space. We also have these theories of Bitcoin's diminishing returns. And we also have these models and predictions that appear in the research papers of multi-billion-dollar hedge funds like Pantera Capital. And all of these models are based upon the simple assumption that the halving triggers a new Bitcoin bull market. It's rooted in simple supply and demand economics. They say when the new amount of supply coming onto the Bitcoin network is cut in half, and if demand remains the same, that means price has to go up. It's as simple as that. That is what all of these models are based upon. And for now, we can see that the numbers are actually on the side of these people who are making very bold claims and predictions about where the Bitcoin price is going to go in the future based upon all of these pretty little models. Okay, so we can see from this chart here that Croesus has put together the Bitcoin growth that you see every single bull market is actually decreasing every 4-year halving cycle. So we can see in the 2013 Bitcoin bull market, Bitcoin returned a whopping 100x return after that 2012 Bitcoin halving. And the peak for that 2013 bull market actually came around 1 year after the halving date. And that is also another one of these similarities that the people who push these models upon everybody point to. They say, look, Bitcoin is so predictable. Bitcoin always sees a bull market and the peak for that bull market somewhere around 1 to 1.5 years after the halving. We can see that the peak after the 2016 halving was actually 1.4 years. That was the infamous 2017 bull market. And the 2020 bull market, our peak came in 2021, 1.5 years after the halving. So going back to that infamous 2017 bull market, we can see that Bitcoin returned you a whopping 30x returns in that halving cycle. So again, that's less than the 2012 returns of 100x. And then if we fast forward to the most recent Bitcoin halving cycle, we can see that Bitcoin only returned, Bitcoin did pretty well. It gave you an 8x return on your money in that halving cycle. So the data that we have now in Bitcoin's first 15 years is pretty clear. It's showing you that, look, yes, every Bitcoin bull market, the returns that we're seeing in each bull market is less. And people are continuing to project this into the future. They're saying, yes, we're going to continue to see diminishing returns forever. And that's because the Bitcoin supply that is brought onto the network every 4 years is cut in half. And I'm not arguing with this part of their equations and their models. We can see it pretty obviously. Yes, we all know that the Bitcoin supply will continue to be cut in half every 4 years, and every 4-year halving schedule that we do see in Bitcoin, the amount of new supply that is cut onto the network is going to make up a smaller and a smaller percentage of the overall supply. So we can see it clear as day by this little chart here. It's showing you how many Bitcoins are mined in between each halving schedule. So between 2009 and 2012, we saw 10.5 million coins mined. In the next halving schedule, we saw 5,250,000 coins mined. And you can see that this amount gets smaller and smaller going forwards into the future. Now, I've actually run some numbers and put them onto a little table because I was interested to see what kind of shock does the halving have on the circulating supply of Bitcoin every 4 years. Now, what I've done is I've actually calculated the amount of Bitcoins that are mined in the year before the halving, and I've compared that to the amount of Bitcoins that are mined in the year after each halving. And what I've found is the differential in the amount of coins that is coming onto the network, and I've come up with some sort of a year-over-year change in the amount of Bitcoin being issued onto the network in the years before and after each Bitcoin halving. So I'm going to show you the numbers behind 2012. In 2012, we saw a Bitcoin supply shock of 1,314,000 coins. So the way that I got to those numbers was I just looked at the amount of coins mined in the year before the 2012 halving, and that was around 2,628,000 coins to be specific. And then in the year after the 2012 halving, there was 1,314,000 coins mined. So the difference between those two numbers is 1,314,000. So that is the shock for that 2012 halving if you're looking at it on a year-over-year change basis. And what I've done is I've compared that to the number of coins that were actually in circulation at the time of the halvings. I'm just trying to quantify just how big of a shock each halving is having on the Bitcoin supply at each time interval that a supply halving happens. So in 2012, I've calculated that the halving had a 12.51% supply shock on the Bitcoin network based on the 10.5 million coins that were in circulation. So I'm not going to bore you guys with the details. I've run the numbers and you can see that each halving going forward into the future, the supply shock at the time is making a smaller and a smaller impact on the circulating supply of Bitcoin. So in 2016, the Bitcoin block reward was cut from 25 Bitcoin paid to the miners every 10 minutes, all the way down to 12.5 Bitcoin paid to the miners every 10 minutes. And in this calculation that I've run with these very rough numbers, that shows that that year-over-year change caused a 4.14% supply shock onto the Bitcoin network. So that was less than the 2012 halving. So I ran the same numbers for 2020 and I got a supply shock of 1.79%. And I did the same for 2024, estimating what the circulating supply is going to be. And I got a number of 0.83%. So all of the numbers I've ran actually confirms the beliefs of all of these people who propagate these models about Bitcoin's diminishing returns. Now, we're going to come back to this table towards the end of today's video when we start discussing the Bitcoin double halving, and I am going to reveal the two rows of this table that are blurred out because these two rows actually contain the data that these people don't take into consideration when they're talking about these diminishing returns of Bitcoin going forwards into the future. So let's look at the first reason for why I believe all of these models could be flawed and simply dangerous to follow. And that is the simple fact that, yes, the new amount of supply that gets cut every 4 years is getting smaller and smaller. That's true. And as a percentage of the overall circulating supply of Bitcoin, the halving is having a smaller and a smaller effect. I'm not arguing with any of that. But what I am arguing with is the fact that price is actually set at the margins. The price of Bitcoin is actually determined by the amount of Bitcoin sitting on exchanges for sale or the liquid and highly liquid supply of Bitcoin, not the total circulating supply. So we're going to come back to that table that I revealed for you guys a little bit earlier, but I want to quickly explain what the liquid and highly liquid supply of Bitcoin is. So based upon on-chain data, if an address is hodling more than 75% of the Bitcoin in its address, and all that means is this entity typically is not selling their coins. So if an entity is actually selling more than 25% of its coins, it is considered liquid. And if it's selling more than 75% of its coins, it is considered highly liquid. And this is very important to actually recognize if we're going to look at how the Bitcoin price is set at the margins, because something very interesting has actually happened in Bitcoin in the past 3 to 4 years. For the first time in Bitcoin's life, coins are actually leaving exchange exchanges. And what that means is the highly liquid availability of Bitcoin supply is decreasing precipitously. So this chart here is actually measuring the amount of coins on exchanges. We can see that it peaked in 2020 at around 3.1 million coins. And this was interesting because for the first 11 years of Bitcoin's life, coins were only sent to exchanges. So this exchange balance, as we can see, grew and grew and grew until 2020. 2020 happened, and since 2020, what we've seen is around 1 million coins leave exchanges. So today, based upon which data you are looking at, there's around 2 million Bitcoins actually sitting on exchanges for sale. So what that represents is we've seen 33% of all the available Bitcoin supply disappear. It's left exchanges over the past 3 years. And what this has meant is the amount of highly liquid supply actually available for sale has also decreased precipitously, decreasing by over 30% since 2020. Now, we don't know where these coins are going. All we do know is they're going to the wallets of people who aren't selling their Bitcoin for more than 155 days. So going back to our good old on-chain data definitions, if a coin remains in a wallet for over 155 days, it is considered a long-term holder. And we can see from this chart here that the differential between a short-term holder and a long-term holder is the biggest it has ever been in Bitcoin's life. So this adds some more data surrounding what happened in 2020, showing that the amount of long-term holders is growing precipitously, and the amount of supply held by short-term holders has just reached its all-time lowest level. Now, this dynamic is actually what's causing the Bitcoin multiplier effect to close in on its highest levels that we've ever seen in Bitcoin's life. So for anyone who doesn't know what that is, for every $1 that flows into the Bitcoin network, it does not push the Bitcoin market cap up by 1x. We have this multiplier effect because not all of the supply is actually available for sale. And we can see today, the Bitcoin multiplier effect is around 4.7, which is nearly its highest level that we've ever seen in Bitcoin's total 15-year life. And this is all due to the fact that over the past 3 years, we are seeing a supply suffocation in Bitcoin. And this is the data that I think we should be looking at and analyzing when we're talking about Bitcoin halvings and what kind of impact this is actually going to have on the Bitcoin market. So let's go back to our table. I'm going to reveal those 2 rows of data that I had previously blurred out for you guys, because what we're going to do is we're going to once again analyze the supply shock that is happening on the Bitcoin network, every Bitcoin halving. But instead of looking at the circulating supply, what I've done is I've run the same numbers looking at the highly liquid supply. So now I have this table back that we were looking at earlier on in today's video, and I've revealed those bottom 2 rows for you guys. So we're going to once again look at that year-over-year supply shock that does hit the Bitcoin network in the years before and after each halving. But instead of comparing that to the circulating supply, like we did in row number 6 earlier on in the video, we're going to actually compare that supply shock against the Bitcoin highly liquid supply. So again, that is the chart that we have on screen, blown up full screen. We are looking at the amount of coins on exchanges and the highly liquid supply of Bitcoin. So when we do run the numbers once again, we can see that in 2012 Bitcoin halving, I've estimated that there was around 800,000 coins classified as highly liquid, okay? And what was the year-over-year supply shock in Bitcoin in that halving? Well, we saw a decrease of 1.314 million coins mined on a year-over-year basis. So again, when you put those 2 numbers together, you get a supply shock of 164%. So again, I'm not going to bore you guys with the specifics. I've run those same numbers for each subsequent halving, and you can see that in the 2016 halving, that supply shock was only 36.5% based upon that liquid supply of 1.8 million coins at the time of the 2016 halving. Again, in 2020, we've estimated that there was around 3.4 million coins actually regarded as highly liquid. And again, when you run those same numbers with a supply shock of around 328,000 coins in the 2020 halving, what you get is a 9.6% shock. So again, a large decrease from the 2016. But then in 2024, what we've done is we've extrapolated the data out a little bit further. So again, none of this is perfect. We are assuming that the past trend of coins leaving exchanges between 2020 and October 2023 continues. And when you extrapolate that forwards, there could be somewhere around 2.4 to 2.5 million coins actually classified as highly liquid. So for the purposes of today's video, just to quantify what kind of supply shock we could see, if there is 2.4 million coins classified as highly liquid, we will actually see a supply shock of 6.83% at the 2024 halving. So what do we notice about all of these numbers? Well, we see a pretty big decrease in the earlier halvings. So the 2016 halving actually saw a shock that was 77% lower than the 2012 halving. So again, this confirms the beliefs of the people who believe that the halvings are going to have a smaller and a smaller impact. Again, in 2020, we saw something similar. That represented a supply shock of 9.6%, and that was 85% less than 2016. So again, a dramatic decrease in the effect that the Bitcoin halving actually had on the highly liquid coins that were actually available for sale. Because remember in 2020, that trend hadn't changed yet. We were still only seeing coins going to exchanges and more coins be classified as highly liquid. But 2024 is really interesting because now we have 3 and maybe 4 years of data of coins becoming less highly liquid, meaning more people are hodling and there's less coins on exchanges. So we can see here that the supply shock in 2024 might only be 6.83%. Now that is only 29% less than the 2020 halving. So when you're actually looking at the highly liquid supply of Bitcoin, Bitcoin might not actually have a halving in 2024. We can see that it's pretty similar to what happens in 2020 mechanistically when you're talking about the amount of coins actually available for sale. So I believe that is the first thing that all of these models are simply not factoring in. They're not factoring in the fact that price is set at the margins, and you need to actually factor in how many coins are available and classified as highly liquid as we did today, or liquid as we might classify in another video. So let's now talk about the second reason why all of these models don't actually factor in the important data. And that is the fact that they assume that the amount of demand for Bitcoin is going to stay constant. So the second thing that all of these models don't factor in is Bitcoin's adoption curve. So they assume that the rate of adoption we've seen in Bitcoin's first 15 years is going to continue into the future, and the only thing that matters or changes is the Bitcoin halving, and it's having a smaller and a smaller effect on the circulating supply of Bitcoin. So today, Bitcoin is adopted by less than 1% of the world. Again, it's very difficult to get exact figures of how much Bitcoin adoption there is in the world, but there's a couple of good reports I'd like to point you guys towards today. So Blockware Intelligence did a pretty cool report in 2022, and they estimated that Bitcoin adoption is somewhere around 0.36%. And Croesus also ran another little bit of a study into Bitcoin adoption back in 2020. So it's a little bit old now, but it was a great one. And he showed that if you're actually looking at people holding more than $10,000 in net worth in Bitcoin, Bitcoin's adoption somewhere around 0.5%. So again, very, very low. And there's lots of different ways to measure adoption. But all I want to highlight to you guys today is even if you're very optimistic, Bitcoin is probably only adopted by somewhere around 1 to 2% of the global population today. And these models assume that, okay, we've had 1 to 2% adoption in the first 15 years of Bitcoin. This trend is only going to continue into the future. And that is simply not how technologies get adopted. Technologies get adopted in an exponential fashion. So we can see from this chart here that every technological revolution that has been adopted by a society has occurred at an ever increasing pace. And all of these adoptions happen very gradually at the beginning, and then they get exponential. And this is where you hear about the phrase of an S-curve adoption chart. An S-curve adoption chart simply tracks how a new technology is adopted by society. When a new technology is invented, typically a very small subset of the community or the society actually recognizes its importance and its revolutionary nature and subsequently adopt that technology. So technologies are normally adopted very slow at the beginning until an inflection point is reached. And once that technology does hit an inflection point, the early majority and the late majority of society now flood to adopt this new revolutionary technology, and adoption goes exponential. You hit the steepest part of the S curve. Now, all of these models that I've seen looking at the diminishing returns don't factor in the fact that Bitcoin is actually a technology. And if it is going to be adopted by the majority of society, wouldn't it make sense that Bitcoin's adoption path actually does follow an S curve? Now, I'll let you guys come to your own conclusions on how Bitcoin is going to be adopted and whether we will see an S-curve adoption chart in Bitcoin. But hypothetically, if we do see Bitcoin adopted exponentially, what are we going to see? What's it going to look like? Well, I've actually pulled up a really cool chart here. And what it's doing is it's actually comparing Bitcoin's adoption chart to the adoption chart of automobiles, the smartphone, and the internet. And what you can actually see is if you look at an average of those three technological revolutions and look at how they were adopted, we have a kind of little bit of a framework, I suppose, to look at how technologies are adopted. So on average, those three technologies took around 12 years of time to go from 0% adoption to 10% adoption. So this is the slowest part of that S curve. And then an inflection point was reached, and it actually took the same amount of time for those technologies to go from 10% adoption to 90% adoption. So another 10 years. So this is very interesting to look at. And when we do actually start considering how Bitcoin is going to be adopted, we should at least ask ourselves the question and be cognizant of how technologies are adopted. And then we get to the more interesting part of the question and we ask ourselves, where is Bitcoin adoption? Are we beginning to see Bitcoin's adoption increase at an exponential rate? I don't know, but I do think it's interesting that things are changing in Bitcoin pretty rapidly in the aftermath of 2020. Before 2020, it was very obvious that Bitcoin was in the very early stages of adoption. If you look at the people buying Bitcoin before 2020, they were very, very, very fringe members of society. If you wanted to estimate it, I reckon it was only 0.01% of the world was even mildly interested by Bitcoin. And then after 2020, something's kind of changed. The allocators in the Bitcoin space have changed, and all of a sudden, Bitcoin is now being bought by nation states. It's being bought by public companies. It's also being mined by some of the largest energy companies in the world, like Gazprom, TEPCO over in Japan. It does actually look like Bitcoin is now on the radar for the entire world. So even anecdotally, does kind of look like something might have changed in 2020, but I'll let you guys come up with your own thoughts about when we could see Bitcoin's adoption begin to go exponential and whether it is even close to reaching the steepest part of the technological S-curve. When we are pondering how Bitcoin might be adopted, I love to look at this chart here. It actually shows every single technology that has gone mainstream over the past 100 years has actually been adopted at an ever increasing pace. So what do you think? Do you think Bitcoin's going to be the same? Honestly, nobody knows. Nobody even knows if Bitcoin is going to be allowed to have another bull market. There's lots of people out there saying that this spot ETF being put out there by BlackRock in combination with these other futures Bitcoin ETFs could be an attempt to actually suppress the price of Bitcoin. Now, if you guys did want to learn a little bit more about this topic, you guys are in luck because we did recently film a video on this one. I'm going to pop a link on screen that's going to take you right to that video right there. And with all that said, I hope you guys enjoyed this one. And if you've made it this far into today's video, I want to give you guys a small little present for sticking around for so long. If you haven't already, you can sign up with SWAN Bitcoin and you can get yourself $10 of free Bitcoin if you use the link in the description of today's video. I hope you guys enjoyed that free Bitcoin. I hope you enjoyed this video, and I'll see you all in the next one.